Are the optimistic Yanks starting to take the Delta drama seriously and Bitcoin sliding? Is the Reserve Bank betting each way on our 2022 boom economy ahead? And has MacBank delivered some ripper news? I'm Peter Switzer, he's Paul Rickard, and we're mad about money. Well, Paul, looks like the Americans are starting to become a little bit nervous about the Delta variant.
Well, it's taken a long while, Peter, because cases have been going up, certainly in parts of the US, down in the south and a little bit in the Midwest. I think the West Coast and the East Coast is not too bad, but it's in areas where they haven't been vaccinated. Look, the share markets, we're not that far off record highs, Peter. I don't know whether they're really worried yet. I think if they were worried, we'd see a little more price action. I think we're in that sort of period now. We've had summer. Summer's over. They've all gone back to university and college has started and all those sort of things are happening. September's the month where they really start to sort of narrow in as to what's going to happen. And maybe we're just starting to see a little more thinking about what the medium-term outlook looks like. And maybe it's not quite as rosy as they were hoping for a couple of months back.
Yeah, I agree with you, Paul, that the US market has really ripped. I think the S&P 500 is up 20% this year. So therefore, on that basis, a sell-off is logical. September and October are often nervous months for the US stock market. Until they're really determined to believe that the Delta variant is not going to knock the economy around, there's going to be some volatility, I think, over the next couple of months, which I think will be a buying opportunity because vaccinations will eventually work. We will get a stronger economy 2022. But nervousness over the next month or two would not surprise me one little bit. And that nervousness has crept into cryptocurrency, down about 10% overnight.
Yeah, down 10%. Maybe it's on the back of El Salvador allowing it to be legal currency, Peter. I don't know. The crypto market, look, we saw it back down at $30,000 in a couple of months back. It's had a good bounce back to back $50,000. Maybe it's just in a bit of a trading range, but we're down again. Just coming back to the equities market, I think the key is probably to watch the bond market because as an old bond guys like to think they're pretty smart. Bonds are just starting to creep up, and that sort of goes against the flow of maybe a slowing economy. It's almost about maybe the inflation genie's just come back a little bit. So the bond market gets the shakes. I think we're going to see it in the equities market. So US Treasury 10-year bonds, keep a close eye on what's going on there.
And what's really interesting, Paul, is if the bond market thinks that inflation and the economy is going to be strong, it puts pressure on real life interest rates in the real markets. But it also means that there's a bit of a battle between the negatives of interest rate rises and the positives from a booming economy. So we might sell a sell-off, but there will be a buying opportunity, I think. So I don't think the equities boom is over just yet.
Yeah, look, I think you're right. I mean, in some ways, go back to Friday's jobs report. Disappointing news on the job front, which should think the economy's slowing, and that should mean lower interest rates. But they got some wage data, wage inflation data, which spooked them. And I think that's probably at the moment just the driving force. And maybe you combine that with a bit more Delta uncertainty creeping in. That might be just the catalyst for a bit more of a pullback in the US.
Yeah, and we'd like to explain why Bitcoin's down, but we don't know.
Next
question, Reserve Bank came out and said, all right, the boom economy is still going to happen, but we're still going to keep giving the economy $4 billion a week until February.
Yeah, I think the interpretation on this was a bit mixed, Peter. It did look like a bit each way because they've cut their buying from $5 billion to $4 billion. But by the way, we're going to keep buying now to at least February, which is still 6 months away, I think, if I get that right.
Yeah.
As Chris Joy pointed out at our Switzer listed investment conference last Friday, Peter, I mean, the volume of new bonds on issuance has fallen anyhow. So in some ways, they had to pull it back a little bit because they were buying more than the amount of bonds the federal government is issuing each week. So I think it's sort of probably more a sign that the Reserve Bank is just a bit worried about the impact of the lockdowns. I'd actually say this was more the whole decision was more, and the fact that it was continued till February, to me, was the Reserve Bank being worried about the economy. That's the way I'd read it. So I'm not sure it was a 50-50 bet, but that's the way some in the market interpreted it.
Yeah, Paul, I think it's naive to believe that if we start seeing a lot less restrictions October to November and a lot less in December, that instantly the economy rebounds everywhere. Many businesses will, travel businesses will, holiday businesses will, but all those businesses in the CBD who will be praying for their office workers to return, those office workers won't be coming back at least until February. February 2, it's Freedom Day, Paul. That's the day parents can drop their kids off at school and wave goodbye to their littlies and head back to the office for sanctuary. That's when I think the economy will start to boom again.
And are you taking credit for nominating February 2 as Freedom Day, Peter? This is a Switzer Freedom Day?
I made it up. I could be tricked by the fact that teachers go back on February 2, the kids don't go to February 3. But that first week in February is going to be Freedom Week for sure for lots of parents who've been living with their loved ones for far too long. Become an annual Switzer Report subscriber and get unprecedented access to my 7 investing principles, where I reveal the exact strategies I use to invest. You'll get access to an exclusive PDF, video recording, and even a free copy of my book, Join the Rich Club. With a 30-day money-back guarantee, a Switzer Report subscription is one of the wisest investments you can make towards your future. Find out more at switzerreport.com.au/YouTube offer, or click on the link in the description below. Finally, Paul, Macbank, Macquarie Group, has reported today. Is it ripper news or not?
Yeah, it's come out with a bit of an outlook statement, Peter. It hasn't actually reported, but it's halfway through its first half, or a bit more than halfway through. It reports at the end of September. And it's doing an update to a conference. It's basically said that its first half profit is going to be down a little bit on its second half profit. Now, going back to Macquarie Bank last year, the first half was relatively small. The second half was a boomer. So it's actually not too bad. It's actually, the first quarter for this year was pretty good. I think the market's probably going to say this is not too bad. It's only going to be down a little bit. That puts it on track to deliver higher earnings this year than last year. Certainly Macquarie has been doing well the last couple of weeks in the market. It's just been quietly ticking up, Peter. Yeah. We always make that an interesting observation, I think. So my guess is the market's probably going to take this announcement in stride and say this is confirmation of what we expect. Look, it's a great company, and again, a stock that you mark down in your portfolio. If there's a big correction in the market, that's a stock company certainly you want to buy.
Yeah, without a doubt. Paul, I think Macquarie is a really good investment, and I totally agree that if it comes off the boil, it's a good stock to buy for the future. I'm Peter Switzer, he's Paul Rickard, and we're mad about money.